Hey, what's up guys, it's Jonathan here. In the personal finance space, there's a constant debate between stocks and real estate. And in some of the videos I've seen that discuss this topic, they usually end up being discussions that are biased to one side or the other. I wanted to make a video that covers some of the misconceptions of real estate investing, coming from a less biased viewpoint, as at the time of this recording I have more money in stocks than I do in real estate. So in this video, we'll discuss 7 common misconceptions when it comes to real estate investing and how they compare to investing in the stock market, and my take on the whole stocks versus real estate debate. So if this video provides you any value, consider hitting the like and subscribe button for the YouTube algorithm. Both greatly help the channel to grow. So let's get right into it. So the first common misconception with investing in real estate, it takes hundreds of thousands of dollars to start investing. And this could be far from the truth. You could get started investing in real estate with zero money down. Many areas throughout the country offer first-time homebuyer assistance programs where you could put little to no money down. And if you don't have any of those programs in your area, there's some loan programs that allow you to put down as little as 3% to buy a house. And at the time of this recording, the average price of a home in the United States is about $350,000. So 3% down would be about $10,000. So you could get started investing in real estate with almost no money down. And yes, with stocks, you could get started investing with a lot less money. But if you live in an area that has first-time home buyers assistance programs, you can get started with zero money down. Another misconception that I hear a lot with real estate investing is that, okay, you buy the house, now you have to find money to repair the house. Well, there's a couple ways to get around this. Let's say your plan was to live in this house first before you rented it out. The best way you could get around this is by using a loan product called the FHA Loan. And with this loan, you could get not only financing for your house, but you can also get financing for the repairs that need to be done as well. If you spend the money making the right repairs to the home, it can significantly increase the value of the home, even to a point where you could essentially be getting a free loan. And when you compare this to stocks, it's definitely a lot more work, but also it's a lot more money that you could possibly make as well. So for example, let's say you buy a home for $350,000. So let's say you put 3% down, which is about $10,000 to $11,000. If you spend $20,000 fixing up the home, a fixed up home like that in my area would probably go for about $400,000. So that means on your $11,000 investment, you just made $30,000 of profit. Or in other words, you tripled your money. Whereas if you gone the route of buying the S&P 500, it would take you about 14 years for you to triple your money. Even though there is more work in real estate, there also is a bigger reward as well. The third misconception about real estate investing, and I'm not sure if you can call this a misconception, but it's an argument that people use constantly against real estate, is that you need a credit score to invest in real estate. I'm not really too sure where to start unpacking this. So yes, to invest in real estate, you do need a credit score so you can get a mortgage. But there's a lot of things outside of real estate that you need a credit score for. You need a credit score to get a car loan, to get a credit card, to get competitive insurance rates. Even in some cases, you need a credit score to land certain jobs. But most importantly, you need a credit score to be able to rent an apartment. And the funny part about it is that most landlords require you to have a credit score anywhere between 650 and 700 on the low end to rent an apartment from them. While the minimum credit score you need to qualify for an FHA loan is 580. It's actually easier for you to buy a home than it is for you to rent an apartment if you don't have great credit. But my bottom line is that you need a credit score to be able to obtain any kind of housing and other basic things that most adults need access to. So the fourth misconception I hear a lot about real estate investing is that real estate is not as liquid as stocks. And typically when I hear stuff like this, people will say something like, you have to put your house on the market and it takes months to sell. And yes, this may be the case if you misprice your home. For example, if your home is priced $50,000 over market value, most people wouldn't want to insult you by writing a lowball offer, even if their offer is more appropriate to what the market is saying that home is worth. In a lot of cases, it actually makes sense for you to underprice your home and then let a bidding war break out and have offers that are above the actual market price of your home. And your home will sell a lot faster in this scenario. And in the case if you didn't want to sell, you can always borrow against the home. Most lenders consider long-term fixed rate debt against real estate to be very safe. So they charge very low interest rates for this kind of debt. And you could borrow against a home in a multitude of ways, either through a HELOC or by doing a cash out refinance against the property. But in all fairness to stocks, I will say that it is much easier to just swipe up on Robinhood and liquidate your stocks. But if liquidity in real estate does not take months if it's done right. Having real estate not being as easily liquidated as stocks may actually be at benefit to you, because this means that it makes it much harder for you to panic sell real estate, which can actually make your investment more profitable in the long run. The fifth misconception I hear about real estate investing is that real estate is not as passive of an investment as stocks are. And to some degree this is true, but there's a couple things you have to consider. First, unless if you're buying an index fund, which usually doesn't perform as well as individual stocks, you'll have to spend a considerable amount of time to make sure that the companies or the sectors that you're invested in aren't going through any turmoil. And if the stocks that you're buying are over or undervalued. Or if you're more of a dividend investor, you also have to make sure that the stocks that you're invested in, that those companies don't go and cut their dividends. And to determine these different factors, it takes quite a bit of time and research to do so. Secondly, like I said before, the returns on real estate are much greater than returns on stocks. Going back to the example I stated earlier in the video, you could get a 300% return on your initial investment in real estate in a matter of a couple months. Whereas if you tried to do the same thing in stocks, it would take you over a decade. So for what you're not paying for in work, you have to pay for it in time. And time is way more valuable than money is. And then third, with real estate, once you have the proper team in place and you have the property rented out, there isn't much left for you to do other than to manage problems here and there that come up with the property. And most of these problems can be managed within a matter of a couple hours every month. The sixth misconception about real estate is that you're constantly having to look for deals, whereas with stocks, you don't have to do that. So if you're buying individual stocks, then you do have to keep looking for good stocks to buy. So here's an example. Let's say I found out about Tesla stock back in 2016 and I just consistently kept investing in it until 2026. And then let's say once we reach 2026, Tesla stops growing at the rate that it used to grow at. Let's say at that point, most of the growth in Tesla has already been realized and Tesla starts to trade more like a normal car company. If I'm more of a growth investor, I'm gonna have to look for another company that is going to grow the way that Tesla grew. So I can now place new money into that company instead of Tesla. And the same concept applies to dividend investors as well. If you have a stock that you like because they pay dividends, and the company cuts or stops dividend payments at any time for any reason, then you'll have to spend time to look for a new stock to buy. And when it comes to real estate, yes, you do have to look for deals, but it's not like you're going to be looking for a deal every single month. So let's just say you're the average person, you're making $50,000 a year, and you save 10% of your pre-tax income to buy real estate property. It'll probably take you about 2 to 3 years to save up enough money to put down on a $350,000 home. So it's not like you're going to be looking for deals every couple months. It's more like you're going to be looking for deals every couple of years. So looking for deals wouldn't be as intense as people make it sound like it would. And then the seventh common misconception when it comes to real estate investing is that real estate is much harder to compound versus stock. And I think that's far from the truth. Real estate usually appreciates at a rate for anywhere between 3 to 5% every year, whereas the S&P 500 usually returns about 10% every year. But the major difference with real estate is that appreciation is based off of the value of the home, not your down payment. So for example, let's say you buy a $100,000 home and you put 3% down or $3,000. This means that if your home appreciates 3% in the first year, you just got 100% return on your investment. Whereas with stocks, if you invested $3,000 into S&P 500, in that same 1 year, you would have only made $300 instead of $3,000. So I think that the compounding potential in real estate blows stocks right out of the water. So here's my take. I think that both real estate and stocks are very great investment vehicles. And I completely believe that you could build a significant net worth by investing in either one of these investment vehicles. But for me personally, at this point in my life, I definitely favor real estate investing. And the reason for this is because you could build your net worth a lot faster with real estate than you can with stock. But to invest in real estate does take a lot of capital. And for the average person, it could take quite a while to save up enough money to be able to buy a home. So for me personally, as I save up to buy another rental property, I'll put it into the stock market in the meantime. And then once I have enough money to put a down payment on a rental property, then I'll go start looking for properties. And once I find something something, I'll then liquidate my stocks and move the money into real estate. So thank you for watching. If you enjoyed this video, please hit the like button for the YouTube algorithm. It really helps with the YouTube algorithm. It helps push this video out to as many people as possible. Also, while you're down there, if you enjoy my perspectives and the way I explain things, consider hitting the subscribe button and notification bell so you get notified every time I post a new video. Also, I would love to hear from you guys. What investment do you think is better, stocks or real estate? Let me know in the comment section down below. Also, follow me on all my social medias. I try to post there every day. And thank you so much for watching. I'll see you in the next video.